Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for this Wednesday, November 18th. My name is Ian Saunders, and joining us here this week as well, Sara Maley. Sarah, we're coming in this morning to some interesting movement, an interesting week of movement that we've seen on the equity side, both on the domestic and international side of things, which we'll get into more in just a bit here today. Coming in here this morning for morning movement on this Wednesday for domestic equity. Saw some back and forth movement through the time of this recording this afternoon. The Dow Jones Industrial Average printed a new all-time high over the course of the past week on its default point and figure chart there. Fell back a little bit yesterday and saw a rally back up to get within a box of that our all-time chart high. This morning, at the time of this recording this afternoon, we're seeing the indexes posting some muted losses kind of across the board, at least for those three main broad indexes that we look at there for the case of the Dow, the Nasdaq, and the S&P 500. And then looking at the chart of the S&P 500, that 20-point chart has been the one that we've really been continuing to monitor throughout the course of the past several weeks and months. And we can see from there the chart is still sitting on three consecutive buy signals, back off a box from that all-time high that we printed there earlier this month at 36.40, but hasn't seen much movement there over the course of the past couple of days. Whereas, Sarah, we have seen some more movement, maybe from some other areas that has not been quite as much in focus over the course of the past week or so.
Right. Yes. So today we actually saw the S&P equal weighted index print a new all-time high at 4,980. This also marked the third consecutive buy signal on the 20-point per box chart. That said, with this recent rally, we do see that index now in heavily overbought territory with an intraday weekly reading of 86%, which you can now find by clicking on the weekly OBOS number. You can easily access the intraday weekly overbought reading. So the third consecutive buy signal today on the S&P equal weight index chart, that signals follow through. This also kind of gives us a heads up that we're seeing strength from areas outside of just the large and mega caps. So another index that we saw reach a new all-time high today was the S&P 400 mid cap index, MID. And we also saw the SML, so the S&P 600 small cap index, rally today as well, but we do note that that particular chart still is off of its high from August 2018. Right now it's sitting at 1,036. 1,100 is that all-time high on that small cap chart. So again, with the equal weight index moving higher, we know that the smaller and mid cap names are able to participate or are participating a little bit more so right now than those mega cap names that make up the majority of the S&P 500 cap weight. The cap weight, as Ian said, hit an all-time high on the 9th last week. It hasn't participated to the extent that the equal weighted index has, but again, it now sits 2 boxes away from a potential new all-time high at 3,660. So we will watch that. It is 59% overbought right now, so not too heavily overbought, but something to monitor going forward. And from a long-term perspective, S&P cap weighted right now remains favored over the equal weighted version of the S&P 500, again, from a long-term perspective. And that's been the case since March when we use when we use the RS chart of RSP versus SPY. So that's the Invesco S&P 500 equal weight ETF, RSP, versus Spider S&P 500 ETF Trust, SPY. And when we create a smart chart with a 3 1/4 scale, we're able to look at the columns, so either X's or O's, to tell us where the long-term strength lies between equal weight and cap weight. And on March 2nd, we saw this particular chart reverse down into O's, favoring SPY for the first time since 2009 is when that particular chart had reversed up into X's. So that the equal weight index maintained strength for about 11 years. Again, up until March when we saw this chart reverse down into O's. So today it remains in O's, but if we were to continue to see outperformance, of the equal weight index relative to the cap weight index, we could see this chart reverse into X's. So this is one that we will monitor and, suggest just keeping an eye on. This is also a chart that we actually drive a strategy off of called the RS switching strategy for RSP SPY. again, when this chart is in O's, it favors SPY. So our strategy simply just owns SPY when this chart is in O's, and it owns RSP when it's in X's. So we're covering that in today's daily equity report. Be sure to check it out. There's been, we have a performance look back since 1995, where we can just see the significant outperformance that, has occurred as a result of just switching back and forth. That particular RS switching strategy on a cumulative basis is up 1,154%, while the buying holding the RSP over the same time is up about 888%, and buying and holding the SPY over that time period is up 691%. So, significant outperformance from that switching strategy. Again, that will be covered in today's daily equity report. But moving on further for U.S. equities, just jumping back to our Dolly page if you're following along on YouTube, U.S. equities still maintain that #1 rank. This past week, we saw a milestone occur when U.S. equities crossed the 300 signal count threshold for the first time since, moving below that, since it fell significantly, through the course since that March 23rd sell-off. So this is the first time that U.S. equities has had a count over 300 since March 6th. Again, leading that second-ranked asset class fixed income, with international equities now ranked third.
Yeah, absolutely. And I mean, as Sarah's touching on there with the kind of broad improvement we've continued to see from the domestic equity side, pushing that asset class higher from the buy signal perspective, is something we've also seen in the international side. We've seen some areas of international equities have shown pretty consistent improvement since the kind of global equity bottom back there in late March. But it was really kind of largely focused on some specific areas of the international equities market. And over the course of the past few weeks here, we've seen a little bit more follow through to the upside from some of those more laggard areas on the backs of maybe some vaccine news or other kind of occurrences globally, but just has pushed the international equities buy signals count from a count of 116 buy signals at the end of October to a recent count of 174. So picking up 58 buy signals over the course of just the past few weeks is a pretty significant move for the international equities asset class as we look back throughout its history. Again, remember, you can, and for those again following along, you can see on the page, it fell to a buy signal low of 65 signals back at the end of March. Actually was a little bit lower, down at 59 a week or so before that. So improved drastically off of that double-digit buy signal count to bring it up to its 174 count we're at currently. And in looking underneath the hood at those areas that have kind of led the asset class higher, as I touched on initially, we saw some countries really kind of be the leaders and maintain leadership for most of the past several months. And it's been largely focused on Asia and really specifically in China and Taiwan. We saw both of those areas kind of be the first into the COVID crisis and first out of the COVID crisis as well, and continue to kind of pick up the pace and lead global equities higher on the international side. Whereas some other areas didn't show nearly as much improvement over the course of the past few weeks and months. And one way that we can come in and we can look at how the improvement has changed from country to country is through putting the different country representatives. We have 43 individual NDW country indexes that we're now tracking on the platform. And what we've done is thrown each of those countries into a matrix and simply say, okay, which countries are those more favorable areas from a relative strength perspective? Which are those that you might want to buy, being in the top quartile of those names? And in looking back, Taiwan is currently the #1 ranked country from that buy signal count perspective in that matrix, and has maintained that position since the end of October there. So it moved into the #1 spot. It had been #1 or 2 since the end of September, and then has improved there, continued to show strength over the rest of the field. China is also in that top quartile at a recent rank of 7th out of the 43 names, so still in that top quartile of names. But in looking at the rest of that top quartile, it's kind of interesting to see that we don't see that many other areas of emerging markets within that top quartile. Whereas if you look at something like a performance standpoint of EEM versus EFA, you're looking at EEM is up about just under 9% on a year-to-date basis, versus EFA, which is up just under 1%, almost flat on the year. So it's interesting to see from this perspective, and we're looking at those two countries that kind of continue to lead the way. China and Taiwan make up almost 55% of that EEM, that iShares emerging markets benchmark there, make up almost 55% of that fund specifically. Whereas if you look at the other areas on the developed side that have shown that kind of consistent relative strength, you look at really those many of the European countries outside of the UK, you see Denmark, the Netherlands, Sweden, Finland, and Switzerland all found in that top quartile of names and have maintained positions in that top quartile of names for quite a while, for several months, in the case of most of those areas. And those 5 countries combined for less than 20% of the broad iShares EFA ETF, ticker EFA. So even though we've seen our broad developed markets underperform broad emerging markets on a year-to-date standpoint and over the course of the past several weeks, using something like this to pinpoint, using relative strength to pinpoint areas of outperformance within developed markets can definitely lead you to some potentially beneficial results. One fund in particular that we can take a look at, we can see Netherlands is ranked pretty highly in this matrix at a rank of 3rd currently out of the 43 individual country representatives we have. And there are a variety of different ways you can use to kind of access exposure to these. But from an ETF side of things, one Netherlands fund that we have that we track here on the platform, the iShares MSCI Netherlands ETF, ticker EWN, is kind of speaks to this continued outperformance we've seen from this region. We have the fund coming in here at the recent fund score posting of 5.42 and a strong score direction of 3.53, sitting on 6 consecutive buy signals, sitting at all-time highs that we saw it print there earlier this month, actually earlier this week, right there at 38.50. A little bit more towards the overbought side of things, but many of these kind of higher relative strength names we've seen become a little bit more overbought recently. Definitely one area to look at, and could be a potential way to come in and look at some other areas that might not be quite as talked about from an investment standpoint that you can kind of get at some of those high relative strength names within developed markets there, Sarah.
Yeah, so I think right about here is where we're probably going to wrap things up today. Like Ian said, we've seen, strength from those emerging and developed countries, just depending on, looking at the weights within EFA and EEM, and just the, making sure that you know what you own. But going back just to some announcements, just wanted to have everyone save the date for a Nasdaq Dorsey Wright virtual symposium. That is going to take place on December 10th from 12 p.m. Eastern to 4 p.m. Eastern. Again, going to be a half-day event, and we hope that you will join us. More details to come. But other than that, we'll keep you posted in our daily equity report. Make sure to join us also for our demo for the modeler tool. That the next webinar is being hosted tomorrow at 1 p.m. and that link to register will also be in our daily equity report this evening. But other than that, we appreciate you listening, and we will talk to you next week.